If you've seen my previous video, the FHA up to 100% financing, no money down program, you're not alone. It's had nearly 65,000 views and hundreds of comments. But some people are still skeptical, asking, is this program even real? Well, let me tell you, it is absolutely real. And today I'm excited to share a real life story about how one of our clients used this program to achieve their dream of home ownership. This client reached out to us early in the year. They really wanted to buy a home, but they didn't have any money saved for a down payment, and they had both owned homes before but never together. And past financial challenges, including a difficult battle with cancer, had left a mark on their credit. When we first checked, their score was just shy of qualifying for this particular program. But this is where the story gets inspiring. We worked with them to create a step-by-step credit game plan to help them raise their score. They followed it diligently, and it boosted their score by 50 points, putting them in a position to be able to be eligible for this program. After exploring all the options, we found that the FHA up to 100% financing down payment assistance loan was going to work for them. The program met their monthly payment goal, and with the help of a seller credit that was negotiated by their real estate agent, they were able to cover the majority of their out-of-pocket cost. After months of dedication, they closed on their new home and have started an exciting new chapter of their life. So yes, this is a real program, and it's made home ownership possible for so many people. Do you want to learn more? Keep watching as I dive into the details and explain how you could benefit from the 100% financing down payment assistance. But before I do, one quick thing. I want to point out why having a buyer's agent represent you can make a world of difference. In this client's case, their agent was able to negotiate a seller credit to help them cover a big portion of their out-of-pocket costs. Beyond seller credits, a real estate agent can often secure other perks like closing cost assistance, repairs, or maybe even just getting the appliances to stay with the home. Having a professional advocate in your corner can make home ownership more affordable and less stressful. So don't underestimate the value of a dedicated buyer's agent. Now let's get into the FHA 100% financing program details. This program, you can finance the entire purchase price of the home without having to put a down payment down. This means you won't have to dip into your savings or wait to accumulate a large sum of cash before buying a home. Not only does this program eliminate the need for a down payment out of your pocket, but it has flexible terms to suit your financial situation. Now, FHA loans do require a 3.5% down payment. So how are we getting and solving for the no down payment part of the equation? Here's how it works. You are going to have your first mortgage, which is going to be 96.5% of the purchase price. Think of it that way. So if we take a $100,000 purchase price, 96.5 is going to be your base loan amount on the first mortgage. And then what happens is FHA is going to allow that you take out a second mortgage that covers the 3.5% down. So that is the down payment assistance part of the equation, is coming with the second loan. So in total, you are financing 100% of the purchase price. Now keep in mind, if you're purchasing that $100,000 purchase price and this program with the first and the second loan are covering 100% of that purchase price, you're still going to have to come out of pocket with some things. So think about this. You're going to have closing costs, and closing costs are going to vary depending on the market, property taxes, homeowners insurance, but you are still going to have to come out of pocket with some money, potentially. Keep in mind that FHA does allow the seller to contribute up to 6% of the purchase price towards your closing costs if you can negotiate it. And that's also a big if, because there are markets across the country where getting seller assistance towards your closing cost might be challenging. But be sure to talk with your real estate agent about it. They're going to be able to give you more information on the viability of that. Also, keep in mind that with FHA, you can get a gift for those closing costs. So you don't necessarily have to have the money yourself. You could potentially get the gift from a family member or relative, or you can talk with your real estate agent about having the seller contribute towards your closing costs. This will minimize your funds out of pocket. This particular program is unique. It's going to allow you to finance up to $726,200 or the max loan limit based on the county of the home that you're purchasing in. So it may not be $726,000 $100,000 in your particular county, but that's the program maximum loan amount. It does have income limits, which is fairly typical for down payment assistance programs, but in all of my years of financing, I've not seen an income limit that is this high. Again, this is going to vary based on the county that you're purchasing the home in. So no, it has income limits, but they're very generous. Another unique benefit of this program is the minimum credit score requirements. Most down payment assistance programs want a 620 or a 640 minimum credit score. This program goes down to a 600 middle credit score. Wow. You might already be thinking, this is for me, and if this is the case, please click the link in the description below to schedule a no obligation consultation with one of our amazing mortgage advisors. In the meantime, let's dive deep into this second loan. If you think about loans in lien position, let's just start there. When you purchase a home and you are using a home loan, that first mortgage that I talked about is going to be in first lien position on the title or deed to your house. The second loan is going to come in right behind that. It's going to take second lien position. So the two of these loans together is what's going to allow you to have no money down for the down payment. But let's be clear, there's no free lunch. I want to make sure you understand how it works with these two liens. The first mortgage, 30-year fixed rate, very typical of what you would see. But the second lien, the second loan that's covering your down payment, is going to have to be paid back if you were refinancing or selling the house within the first 10 years. That's a big key here, because it's very likely you are going to refinance if interest rates drop as they're predicted to do. Now, the good news is there isn't a prepayment penalty on this. So depending on your equity position and if it makes sense for you to refinance or sell in the future, just know that the balance on that second lien will be paid off as part of the refinance or the sale of your house. So not a big deal, but it's not free money. It's still there and it still has to be paid back. If you are doing so within the first 10 years of taking out the financing. After 10 years, the second will have already been paid back. Now, there are two options on how to structure the second loan financing. Today I'm going to talk about the most common, which is, going back to our example, if you're purchasing a $100,000 house and your down payment assistance is 3.5% of $100,000, that means your second loan is $3,500. That $3,500 is amortized over a 10-year period. So you have your principal and interest payment on the first mortgage and the principal and interest payment on the second mortgage. That's how you are going to continue to pay down the balance of that second loan. The interest rate on the second loan is going to be 2 percentage points higher than whatever the first mortgage loan interest rate is. After 10 years in that structure, that money's paid back, the loan is paid off, and you are good to go. Now you may be wondering, is this just for single family residences? No, this is another benefit of this program. You can use it on a single family residence, a duplex, a double wide manufactured home, a townhouse, or a condominium, as long as the condo is approved by FHA. The lender is still going to use FHA guidelines to qualify you, meaning your credit profile, your debt to income ratio, your usable income to qualify you for the program. That's all going to just be based on standard FHA guidelines. It's very unique too that this program doesn't have kind of a maximum debt to income ratio, but keep in mind anything over a 50% is going to have to really make sense, because we want to be sure that we're setting you up for success when you're utilizing this program or any other home loan available today. If you're interested in this amazing national down payment assistance program, please click the link in the description below to schedule a 15-minute strategy session with a qualified Kelly Zitlow mortgage advisor. We're here to help you every step of the way. Our experienced mortgage team is ready to answer any questions you may have and guide you through the entire process. And don't forget to subscribe to this channel.